Okay, the single fastest way to improve your trading is to get inside the head of a professional trader. Today, you get that chance. No fluff, no toxic positivity, just a real trade, broken down moment by moment. In this video, one of our highly experienced traders will guide you through his trading bar by bar, revealing how he determines precise entries, precise exits, precise risk reward, and more. I'm Mike Bellafiore of SMB Capital, a proprietary trading firm in New York City and Miami, where we've helped build the careers of numerous 7 and even 8-figure-a-year traders. If you're serious about your growth, you're in the right place to learn.
Welcome back to another Bar by Bar. Good trades don't just make money, they teach you something. This month we saw a lineup of setups that every active trader should have in their playbook. A biotech breakout that checked every fundamental and structural box. A simple day 3 continuation that proves why sticking to the rules works. A mean reversion in one of the market's strongest names after a sharp sell-off. A hot IPO opening drive that showed its hand on the tape right away. And back-to-back IPO breakdowns that reminded us why context and pattern recognition give you conviction to size up. These weren't just trades, they were lessons. Let's break them down one by one, highlight the key takeaways, and add some fire to your own playbook. First, we'll look at THAR from the 25th. THAR gave us the kind of small float biotech breakout that we love. Clear catalyst, tight supply, and price structure setting up perfectly. The key takeaway, when all the boxes line up, you don't need to overthink, you could just execute. The kind of setup that appeals to more analytical traders as well. It checked a lot of boxes that you want to see. A clear unmet medical need, FDA fast track status, national security relevance, and a micro float so supply is limited. Of course, there are real risks, only 6 months of cash on the books, a history of raising money, and more dilution likely to come down the road. But in the near term, supply was tight because of lockups, which is exactly what allowed it to run. The key takeaway, when a stock lines up this many fundamental and structural positives, you don't need to predict. You just need to be there to trade the breakout when it confirms. All right, so here's our chart of THAR. You can see on day 1 of the catalyst, it had a strong move on high volume, trading almost 400 million shares. So it rotated its float almost 400 times. On day 2, it gapped up and it closed higher. On day 3, it put in an inside day. And if we zoom in and we look at a 30-minute chart, you could see that it tested $6 multiple times. Once, twice, 3 times, 4 times, 5 times, 6 times. So this was really simple. All we needed to do was set an alert a little bit below 6. Interestingly enough, on the day of the trade, it spikes up right off the open. It tests that high from day 3 and it fails. And it fails to make a new low. Then you can see volume really thins out and it's able to reclaim VWAP and volume comes back into the stock. It sets up an opening range break to the upside on volume and then breaks that $6 level on the highest volume bar of the day. That is our entry trigger. The breakout through that key level, $6, which was the recent high and tested multiple times. You enter on the break of $6 and you just set your stop a few cents below that high volume confirmation breakout bar. From there, I always suggest implementing 3 different ways to take profits. One way you could have done that is after the stock goes limit up above $6, it gaps up and opens. That could be used as a momentum exit to lock in 1/3 of the position. From there, you could wait for a blow-off move, which comes into $9. You could see price expanding to the upside and volume increasing, and you could sell into that whole number. And on the rest of the position, you could wait for a break of trend, which happens as price crosses back under the 9 EMA for the first time since the breakout. GXAI was your classic day 3 continuation, just an amazing breakout trade for beginners due to how simple it is. Big move on day 1, consolidation inside day on day 2, and then a breakout through the day 2 high on day 3. The lesson here is respect the pattern and the rules, and know that momentum doesn't always end after the first day. We did a video on this exact setup highlighting multiple examples. If you haven't checked that out yet, it's titled Elite Prop Traders High Odds Breakout Technique, Step-by-Step Instructions. So zooming into the daily chart here, we see the day 1 catalyst. GXAI announced an AI video creation platform. It had a relatively low float, coming in at about 4.6 million shares. On day 2, we had a low volume inside accumulation day where bulls were accumulating, shorts were feeling pretty comfortable in their positions, and then on day 2, we got the breakout off the open of the day 2 high. On day 3, the stock opens up and gets through that day 2 high. That is the entry trigger. As soon as you see price surge over the day 2 high off the open, you enter for the day 3 breakout with a stop just a few cents below low of day. It is that simple, and you must be willing to accept the stop to low of day and accept that risk. That's what makes this trade so simple. From there, you want to scale out of 70 to 80% of your position into momentum. So for instance, we get the break, we get the pullback, and the retest of the day 2 inside accumulation day high, and then price surges higher. You want to be scaling out into that momentum. The way that I like to do it is 5% at a time. We get another pullback and another surge, and momentum comes in. You can see on my daily chart here, we were testing that day 1 high, that recent high. As price slows down into that level, you want to be scaling out, ultimately leaving you with 20 to 30% of that position versus low of day, and you want to be patient on the rest. And the ultimate goal for this trade is a close on high of day to take additional profits and leave yourself with a potential swing trade. That is the day 3 breakout. You have a strong day 1 catalyst. You have a low volume inside day on day 2. On day 3, off the open, you want to see a surge over the day 2 high. That's your trigger to enter the trade, and the stop goes at low of day. It is really that simple. PLTR has been one of the strongest names in the market, then sold off 25% in just 6 days. That's when the 9 and 21 EMA cross intraday signaled the turn. Key point for this trade is context on the daily matters just as much as the trigger on our intraday time frame. You see our daily chart. Palantir, one of the strongest stocks in the market, AI related, has been trending higher all year. Recently, it has pulled back 25% from the high in just 6 days. And naturally, traders are looking to play a bounce in this stock. But how do you do that safely? I've had to learn this lesson the hard way. I've been watching the 9 and 21 EMA on my 1 and 2 minute time frame for years now, and I've noticed this pattern to help me play bounces when we have similar daily chart setups as we do here in Palantir. So what's really important for this setup is we have a similar daily chart like we do here with Palantir. We have a multi-day pullback, and price is actually expanding to the downside the lower it goes. That is key for this mean reversal style trade intraday. On the 2 minute time frame on the day of the trade, we want to see high RVOL. We want to see volume that surpasses the volume done of the previous days of the sell-off. That is very important. We also want to see price rejecting from the 9 and 21 EMA, and it's sort of acting as resistance. The trigger for this trade is the trend break in combination with the 9 crossing back over the 21 EMA. This signals a shift in momentum intraday. I've seen this happen over and over throughout the years with similar daily charts as the one here on Palantir. That is your entry trigger, and you must be willing to accept the stop to low of day and accept the risk on that trade. This way, in case the stock doesn't V-bottom, and it doesn't always V-bottom like it did here, you will not get shaken out of your position on a higher low, which is how these also commonly set up. So you could get your trigger, but you could also get a higher low that pulls back a little bit. That's why it's so important to accept that low of day stop. For this trade, my rule always for mean reversions, not just this specific intraday setup, is to sell half into VWAP. If Palantir is going to continue to go lower, it is likely to get rejected at VWAP. It is an excellent spot to take off half of that position and lock in profits. From there, you have a profit locked in, and you could be patient with the remainder of the position for a multi-day continuation and bounce higher. Naturally, you're going to want to sell some into high of day, but I highly recommend being patient with the rest. After a sell-off like this and one of the strongest stocks in the market, you could see a multi-day move. Bullish, BLSH, was a recent IPO priced at $37. It opened at $90 and immediately showed us where the demand was. A stacked bid held twice at $90, and when it did, that was the green light to enter long for the opening drive. The lesson here is watch the tape on IPOs. For whatever reason, the tape is very clear on IPOs. They telegraph their tells if you're paying attention. All right, so here's a look at BLSH on the day of the IPO. You can see it opened at 90 and it surged, being halted for volatility at $102.44, then opens higher and pushes all the way to 118. Now, what we're gonna do is take a look at the tape together because that was the tell and that is the key takeaway for the trade. All right, so here is our tape replay software, and we're gonna play this at half speed, and we're gonna watch the bid at $90. We're gonna see that bid hold at 90. We're gonna see price push off of $90 to around 95, and then it comes back into 90, where that bidder steps up again with large size. After price lifts off 90 that second time, that was the green light to enter into a position for the opening drive with a stop just below $90. Now, something to keep in mind is everyone who's an active day trader will have their stop just below $90 once they see that. So when you're putting on risk in this trade, it's really important to understand that you could get slipped. So you shouldn't expect that you'll get stopped out at 89, 98 or something like that. You should be willing to accept the risk about $1.50-ish worst case slippage. Let's go ahead and watch this tape. BLSH opens at 90 and we see stacked bids here. EDGX, BATS, PACF, NYSE. The one that really sticks out to me is this NYSE bidder here, showing a size of about 210,000 shares, about $19 million in notional value there at 90. And we'll see that bid held, and now it's lifted. All right, price pushes up to about 95, and now we're going to see price come back into $90. And we're going to see that NYSE bidder still there. So we saw some stacked bids there, and then all of a sudden, NYSE appears again with the same size. This bidder is willing to take all they could get at 90. And then it lifts. And then from here, it is off to the races and price surges, going limit up at $102.44, gapping up when trading resumes, and then making a high of $118. That is the key takeaway and what we look for on the tape when we are trading IPOs that debut. Now, there are multiple ways that you can manage this trade. After the limit up, when price gaps up, I would highly recommend taking some profits into that momentum and into that gap up. And you definitely want to be scaling out into momentum. You could wait for a break of prior bar lows on the remainder of that position to take profits. Next, we're going to look at an IPO breakdown. So first, BLSH, that hot IPO that we just went over, priced at $37, opened way above that at 90, and then later broke recent support on the daily. When it lost that recent low, there was no safety net underneath, right? No support levels, no price action. So the flush was violent. The very next day, FIG gave us the same setup. Same type of IPO profile, same context. And when it broke lows, it unraveled almost the exact same way. That's the power of pattern recognition. Once you've seen a breakdown like that, the second time around, if it happens again in the next couple days, you could attack it with real conviction and size. It's the same as like when you spot a catalyst that moves one name and then a few days later, a different ticker gets hit with a similar catalyst. The pattern plays out again, and if you're ready, you could really capitalize. So here's a look at BLSH. It surged to $118. On day 2, it pulled back. On day 3, it tested that low, and then it broke down. It broke down through the opening price. It broke down through support. There was no support underneath that opening price at $90. And it was a very clean breakdown. Interestingly enough, FIG the very next day had a very similar move on the 19th. Let's zoom out a little bit and look at a 30-minute chart. We could zoom out a little bit more and look at an hourly. You can see over like the last 15 or so trading days, it puts in support between $76 and $75.50. Hold 76, hold 76, hold 76, holds, and then puts in a low after hours at $75.50. Just the day before, we saw a really clean IPO breakdown that worked as soon as that last support level, that recent low, was breached. Now, this is an opening drive style trade. As soon as that last support level, that recent low, is breached, we are taking our short. The stop must be a few cents above high of day. You need to be willing to accept the risk versus just a few cents above high of day. And I saw traders shorting and getting all their size as soon as 75.50 was breached. I saw traders shorting 75.50, 75, and 74. No matter where you're getting short on that opening drive lower, that first minute, your stop needs to be high of day. From there, I saw many traders scaling out into momentum. So you can see momentum to the downside. Traders are scaling out and covering pieces of their position. Price consolidates. Then we get more momentum to the downside and new lows. Traders are scaling out into that. Price consolidates. We get momentum through the lows and a new low. Traders are scaling out of their short and locking in profits. Similar to PLTR, what works really well if you want to hold a piece is risking a cross back above the 9 and the 21 EMA. For whatever reason, really strong trends will respect the 9 and the 21 EMA, and when we finally get across and hold back above, that signals that that downtrend is over. And that is a high probability cover. It is a high probability exit. And that is where I saw most traders take profits. Thanks for tuning in to another Bar by Bar. Hope you learned something.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of S&B Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with S&B to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part? You don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.